$0. That's the down payment on a $300,000 house, using the one benefit most service members never touch. Not a gimmick, not a first-time buyer program. A loan the government stands behind, with nothing down. And here's the part nobody explains at the recruiting table. There's a group everyone assumes is locked out of this, and they actually qualify. I'll show you exactly who before we're done.
This is Erica. No down payment, no mortgage insurance. Not for 1 month, not ever.
Today we go deep on the VA home loan, the most valuable benefit in the whole package, and the one people leave on the shelf. Nearly 90% of these loans close with nothing down at all.
So what does nothing down actually buy you? I'm May, not a mansion, a real house. The kind of place with 3 bedrooms and a driveway, like this one. And the bank says yes, because the VA guarantees up to 25% of the loan. Same shape as insurance for the lender. Their risk is covered, so you don't have to write a check to cover it.
Yeah, and it gets better. This is Liam. If you carry a VA disability rating, even the one fee this loan charges gets waived completely. My read is that's thousands of dollars just gone.
One honest catch before anyone gets excited. This has to be a home you'll live in. No vacation rentals, no pure investment property. You certify you'll actually move in and make it yours.
Both things are true. Incredible deal, and it comes with rules. That settles the myth part.
We built the full breakdown free at military.professorerica.com with a calculator that shows your real monthly payment with nothing down and no mortgage insurance. And this exact question shows up under every one of these videos, word for word. Can you really buy a house with no money down, or is that a myth? Short answer, yes, it's real, it's federal law, and it's the single biggest reason this benefit exists. So let me show you exactly why it beats a normal mortgage.
So what actually makes this loan special? Line it up next to a regular mortgage, and it isn't close.
Careful with the word regular here, because a regular mortgage costs you far more just to get in the door. Start with the down payment. On a $300,000 home, a conventional loan wants around 5% up front. That's $15,000 in cash before you own a single doorknob. The VA loan wants nothing down as long as the price isn't above the appraised value. That one difference is the gap between buying this year and saving for 3 more, and it's the guarantee doing the heavy lifting behind the scenes.
Look at this, side by side. Same house, 2 loans. The conventional buyer brings $15,000 and still pays mortgage insurance every month. The VA buyer brings nothing and never pays it. And that monthly mortgage insurance on a conventional loan, you're basically stuck paying it forever.
Yeah, small thing, but it's not forever. Conventional PMI usually falls off around 20% equity. My read is the real VA edge is you never pay a cent of it from day one.
You're right, I overstated it. It does come off eventually. The point stands though. The VA borrower skips it entirely.
Both things are true. Lower barrier, better terms. VA rates often run below conventional, and closing costs are limited by rule.
Okay, is there any protection on the house itself, or does the bank only care about its money?
Good question, and yes. Every VA purchase runs a VA appraisal against minimum property requirements. The home has to be safe, sound, and sanitary. It's not a full inspection, but it's a floor a conventional loan just doesn't hand you.
Same shape as a cosigner you never had to ask for. The VA stands behind the whole deal, and it tilts every term your way.
Real quick, because this next part matters to you. If any of this is helping, tap that like button, then hit subscribe and ring the bell so the next one finds you. Both are free and take about a second, but they tell the algorithm to show this to one more person who needs it.
Okay, there has to be a catch. Where's the fee?
Almost. There's one. The VA funding fee. One time, and it's done.
Think of it like the price of the guarantee. First use, nothing down, 2.15%.
And where does it land? Same shape as rolling fees into a car loan. It's financed right into the mortgage.
So on a real house, what's that in actual dollars?
Watch. A $300,000 loan, first use, nothing down. The fee is $6,450.
Wait, $6,000? That's the catch?
Not for everyone. Get VA disability compensation, even a 10% rating, and the fee is waived entirely.
So it drops to nothing. Same house, zero fee.
And if you're not exempt, be straight about it. That $6,400 is real money, financed over the life of the loan. Purple Heart recipients and surviving spouses skip it too.
Okay, so who actually qualifies to use this thing?
Do you qualify? Think of it like a service ledger. The VA checks your time in, not your credit score first.
Okay, so what's on the ledger?
Straight from VA.gov. And this is who's behind the loan. The seal you'll see on every document. The VA guarantees it, which is exactly why the rules are about service, not wealth. Active duty first, 90 continuous days of service, and you meet the requirement. That simple.
And veterans. Did you serve a full stretch, generally 24 continuous months, or the full period you were called to active duty?
Here's where people wrongly count themselves out. National Guard and Reserve qualify too. 6 creditable years in the selected reserve, or 90 days of active duty service. I'm as stubborn about this one as I am about my grandmother's borscht recipe. No variance allowed. Guard and Reserve are in.
Hold on. Guard and Reserve, no combat deployment required?
Correct. 6 creditable years in the selected reserve does it on its own. When this breaks for people, it's because a recruiter years ago told them reserve time didn't count. It does.
And remember the group Elena promised would surprise you, right at the top. Surviving spouses. If you receive certain VA dependency compensation, or your spouse was a prisoner of war or missing in action, this benefit is yours. Most people have no idea. Liam, you've had a hand up. Go ahead.
Yeah, I have. If I qualify, how do I actually prove it to a lender?
One document, your Certificate of Eligibility, the COE. It tells the lender the VA has your back.
Wait, and I can get that myself today?
You can in minutes. Right here on VA.gov, you open How to Request a COE and you click Request a COE online. The VA pulls your service record and issues it.
Same shape as any online application. It's VA Form 26/1880, and honestly, your lender can pull it for you through their system while you sit on the couch.
Boxes checked, COE in hand. So, is the VA loan always the right call? Not quite always.
So is this a one-time thing? No. And that surprises people.
Almost nobody realizes this. You can use the VA loan more than once. Sell the home, pay the loan off, and you restore your full entitlement, then do it all again on the next house. When this breaks for people, it's because they assumed it was a single-use benefit. It isn't.
Yeah, and say I don't want a new house, I just want a lower rate on the one I've got. Is there a refinance for that?
There is the IRRRL, the Interest Rate Reduction Refinance Loan, the Streamline Refi. Its whole job is to drop your rate. No new appraisal, no credit underwriting package, and it can even be done with no money out of your pocket by rolling the costs in.
For the fine print on reusing and refinancing, we called in someone who reads these loans for a living.
Two things people miss. First, there's also a cash-out refinance, which lets you tap the equity in your home for cash, not just a lower rate. It's a real lever once you've built some value.
Hold on. So can I buy a rental with this and just not live there?
No, that's the line, and it's the one that trips people up. The purchase loan requires you to occupy the home as your primary residence. It's for buying you a home, not an investment property. The one exception is the streamline refi, where you only certify that you lived there before. That's the heart of it. Treat it as a home first, reuse it when you move, and it's the best loan you'll ever hold. Thanks for having me on.
Same shape as a library card you never age out of. And that $6,400 fee we walked through earlier? If you're rated, it's 0 on the next house too.
Okay, my read is it's simpler than it sounds. I could fall down the refinance rabbit hole for hours and never climb out, streamline, cash out, entitlement, restoration. But the exit is one question. Is this a home you'll live in?
And honestly, people picture the second house as a beach condo, a lake cabin, or a mountain retreat.
And realistically, it's the first house with one more bedroom.
Both true, and it still has to be one you live in. Reuse it, refinance it, restore it. One benefit, a whole housing life. Now the real question, is it always the right call? Here's the fork most veterans hit at the closing table. 2 loans on the desk. Erica says the VA loan wins almost every time. Liam says a conventional loan beats it more often than people admit. I'm in the middle, and I'll give you the verdict. Erica, make your case.
It's not close for a first home. 0 down, no PMI ever, better rates, and a fee that's waived if you're rated. You keep your savings and you're in the house. That settles it for most buyers.
Okay, and that's exactly the sale I'd slow down. My read is the VA loan is fantastic until you're in a hot market. A seller staring at 5 offers sees the VA appraisal and the paperwork and takes the conventional buyer who waives contingencies. The best loan on paper loses the actual house.
Hold there, Erica. That's a real problem. Does the strongest loan actually lose in a bidding war?
It can, and I won't pretend otherwise. In a wild seller's market, a cash-heavy conventional offer looks cleaner. But that's the market, not the loan. In a normal market, 0 down wins going away.
And the investment case, that's the real one.
The rental, fair. The VA loan is owner-occupied, so you can't buy a pure investment with it. But that's one lane, not a knockout.
Liam, last word before I rule. When should someone skip the VA loan entirely?
2 cases. An investment property you won't live in, and a bidding war where bringing cash wins the house. Everywhere else, for a home you'll actually live in, the VA loan wins.
Which is the concession I wanted.
It is, for the home you'll live in, it's the better loan. I'll give you that.
Then here's the verdict. And here's what I'd actually do. If you're buying a home to live in, use the VA loan. That's the smart play, full stop. 0 down, no mortgage insurance, and a waived fee if you're rated make it the strongest owner-occupied mortgage in the country, straight off VA.gov's own terms. Go conventional in exactly 2 cases. An investment property the VA loan legally can't touch, or a bidding war where bringing cash wins the house. The benefit you earned beats the bank loan almost every time you'll actually use it. Quick landing. The VA loan buys a home with 0 down and no mortgage insurance ever. Its one funding fee is waived entirely if you carry a disability rating, and you can reuse the benefit again and again as long as you live in the home.
The move for you tonight, and it takes 10 minutes. Go to VA.gov and request your Certificate of Eligibility. You don't need a lender, you don't need a house picked out. Get the COE in hand and you're ready the day you find the place.
Next time we run the full closing, step by step, from offer to keys. There's a couple of moves in there that quietly save thousands, and one that trips up almost every first-time buyer.
And the exit question is still the simplest one. Is this a home you'll live in? If yes, this is the best mortgage you'll ever get.
If this saved you a down payment you thought you needed, tap like so the next veteran buying a home actually sees it. And subscribe, because we refresh these VA figures every year when the funding fee and the limits shift, and the one we honestly can't settle for everyone. Would you use your VA loan on a smaller starter home right now? Or keep saving for the one you really want? Tell us below. Failure is data. Collect it honestly. See you next time.
8.9. Elena. Rounding down because grading is a science, not a feeling. This is Professor Erica. Thanks for watching and signing off.